Great, thanks. Hi, guys. Yes, this is Mary Ellen, founder of MEM Investment Research, and let's get started. I have a fair amount of exciting things to share with you as far as how you can screen for top candidates. Once they pull back, you can profit from that pullback. Just a little bit of background for those not familiar. I do have quite a bit of experience both on and with Wall Street. I ran $2 billion in assets in the beginning of my career and went on to work with William O'Neill and Company, founder of Investors Business Daily. I worked with top portfolio managers, analysts, advising them not only on the market, but teaching them that O'Neill methodology of how to get in front of big moving stocks just as they take off. Currently, I mentioned MEM Investment Research, where I have a top performing bi-weekly newsletter. At the end, I do have a special 4-week offer for you to get in on that newsletter. It's filled with great information, of course. And then I'm also the Senior Managing Director of Stocks at simplertrading.com. You can check me out over there as well. So let's get started. Today, we are going to cover how you can profit from stocks when they pull back. And we're going to take a look at where you can locate some of the best candidates, precise entry points as the stock then reverses from its pullback, which technical indicators are going to really be the most helpful. And again, stocks that are recovering from pullbacks. These big winners are not going to endlessly trade to the sky, if you will. They will have periods of consolidation, and that's what we're going to be focusing on today. So let's go ahead and start at the beginning. I mentioned my background with O'Neill and Company. So my first item here is which stocks will advance the most. And I have an answer. It's based on an historical study. It's a proven methodology. Those stocks that have strong growth, both earnings and sales, those are the stocks that will advance further and faster. So we're going to cover some of those names. I have all of my charts are current. Also, timing your entry. Of course, that's going to be critical no matter what time horizon you use for your investing. And then how long should you stay with the stock? In addition to getting into these stocks, they will pull back again, inevitably. So let's take a look at some of the key ways that you can uncover top pullback candidates. First up, you are going to want to make sure that you are searching, that you are screening in industry groups that are outperforming. In other words, you want to be where that strength is. Oh gosh, over 50% of a stock price movement, either up or down, is attributable to that industry group or sector that that stock is a part of. So that's number one of importance. You also, from my work, want to make sure that the stock has recently had strong performance. And the reason for that is that strong performance oftentimes is going to be due to high growth prospects. And of course, you want to make sure those growth prospects are in place. But generally speaking, those are the stocks for screening purposes you're going to want to look at. And a stock has a sound reason for doing well. And I did mention industry group, but you also want to, again, make sure that the growth prospects are there. We're in the thick of earnings season and lots of really great candidates that are coming to the forefront. It's been quite a good earnings season so far. Institutions are involved in the stock. I say that because they are still the primary driver of a stock price movement. I know we've had some great new participation among retail investors, and that has moved select stocks and otherwise. But again, institutions generally overall are going to be the big movers. So for me, that tends to draw me toward more liquid stocks that these institutions would be attracted to. You also want to make sure that the economic backdrop, not just for that stock, but for the broader markets, is it healthy? Are we in an uptrend to help support a continued move up when these stocks do go on to reverse. So let's begin here. I'm going to talk a little bit about how you can pinpoint your entry and exit points. Lots of examples coming, so stick around, of course. So first is the stock that I talked about it being in a strong area, generally faster moving. At the end, I'll share with you precise screening characteristics that you can use, but you want to see that stock pull back to a key moving average. There are oftentimes periods where these faster moving stocks will undercut these key moving averages, shake out those weaker holders, and then come back. So this will make more sense when we get into some of these examples. You want to see volume pick up as the stock moves away from that moving average, and that volume is going to give you that confidence that there is further upside ahead. And also helpful is if in that period of coming out of that pullback, the stock breaks out of a base, or it goes on to form the right side of a base, giving it further upside potential. The other item here is that the stock, as I mentioned, oftentimes it could break below key support on volume, while the broader market goes higher. And I have to be honest, I'm not quite sure what I was trying to say there, but as we move forward, I'm sure that will come to light. So let's take a look. I always like to begin by reviewing the broader markets. We want to make sure that the markets are in an uptrend. So this is a current chart from today, yes. And so what we are looking at here, I have those simple moving averages that I've referenced a couple of times. So I like to use the 10, a 21, and a 50-day simple moving average. And we can see this green line is the 10. The kind of purpley line, pink, is 21, and then that red is your 50-day. So this is going to be consistent throughout today's webinar. But for purposes of telling if the broader markets are healthy, you want to see them trading above these simple moving average, particularly these shorter term. That's going to be a little bit stronger. If we break the shorter term moving averages, doesn't mean exit, it's just a yellow flag, but we can see this pullback last month. The S&P did find support at that 50-day simple moving average. So these pullbacks, while they can be painful if some of your stocks go down further than the markets, they really are gold mine opportunities as far as getting into these stocks as they pull back. And I think that'll be evident as we move forward here. I also use some outside momentum indicators, RSI, that's a relative strength indicator. And I want that to be up above that 50, indicating positive relative strength. So we do have that characteristic. And then stochastics, these are a fast moving momentum indicator, really ideal for industry group movement, broader market as well. And the stochastics also up here above 50. So net, as of the close today, August 3rd, the broader markets are looking quite healthy. So from here, let's take a look. I mentioned that you want to make sure that you are screening and searching, and this is not just for pullback. It's really for no matter what style of investing, breakouts and so forth. You want to make sure that you are searching in those areas that are showing relative strength with an eye toward continued outperformance. So I'm sharing with you XLK. This is the S&P 500 technology sector, and we can see that it did experience, this was another ideal at the time, rather harrowing experience. Stocks sold off as interest rates were rising, inflation fears, etc. But it did present itself again as an ideal buying opportunity, but you would want to see certain characteristics. We're going to get into that, but overall tech has outperformed since this pullback period and still in a very confirmed uptrend. Your outside momentum indicators positive. And then drilling down beyond that sector, here is a look at the software ETF. IGV is the ticker. It's a bellwether tech software growth stocks here, of course, as well. And we can see this was a very big winner coming out of that tech pullback, and it's currently consolidating. We're seeing this with a lot of software stocks as well, as they just kind of mark time back and fill after hitting a new high mid-month July, but still very much in a confirmed uptrend. So just highlighting where you'll want to be, one of the areas ideal to be looking at right now. So from here, we can take a look at some examples. So this is Cloudflare, ticker symbol NET. And what I did want to point out to you is when you are looking for candidates after a pullback, those stocks that are in a strong group that are the first out of the gate, so to speak, and Cloudflare was NET, they do tend to go on to be your leadership names, and Cloudflare certainly has had a very significant performance here, but today I'm focusing on this pullback that occurred. Now this chart is taking us to July 20th, so I just wanted to highlight in that mid-July period the pullback that we did see in software stocks. So NET did undercut this 21-day simple moving average. However, you can see that your outside momentum indicators remained positive, so indicating as long as we see that, it could be a buying opportunity, unlike this May pullback where your outside momentum indicators turn negative, not as compelling. So we can see that NET is trading up, potentially reversing this pullback while the outside momentum indicators are positive. So let's take a look and see how NET did perform subsequent to that. But first, we want to take a look. This is again taking us back to that July 20th period. We want to see it on this intraday. I like to use a 1 hour price chart, and the moving averages here are the 5 and a 13-hour simple moving average. So what you want to see on this intraday, this is again taking us back to July 20th, you want to see a price break back above those simple moving averages, and then in line with that, the RSI and the MACD moving average convergence divergence. That is another momentum indicator. First up, you want to see that black line crossing up through the red. That's telling you that that downside pullback momentum has shifted. It's turning positive, and ideally then it goes up above zero, which is even more constructive. But when you can marry these three characteristics together on that intraday, of course you want to make sure that the daily chart is also positive, which we did see. And so let's go ahead. I mentioned that I would show you a current chart, and here we are. This is NET on the daily chart. So we can see this was that last slide. We were highlighting the pullback and then the move out of that pullback and then the intraday combining. So we did get a nice significant move. Subsequent to that, we can see NET is now marking time with the group. So eventually another leg up, ideally. Let's take a look at another software stock. This is DocuSign. And again, looking at that pullback. Now this occurred a little bit earlier in July, but this is a current daily price chart of DocuSign. A big winner out of here, came out with great numbers, super good uptrend, but we can see it is pulling back in line with that industry group. However, your outside momentum indicators, RSI and your MACD, are both positive. So this could be an ideal candidate for this pullback. What I did want to point out too is this July pullback, the characteristics that really were compelling here. It broke below the 21-day, but it did close above it. So buyers did come in on the pullback. Most importantly is on the daily chart, your outside momentum indicators are still in positive territory, making this pullback viable and buyable, if you will. But let's go ahead and take a look at the intraday. And so before we do that, I'll share with you again this pullback and in the fact that it did reverse and have a significant gain out of there with your momentum indicators positive. On this 1 hour price chart, here are the dynamics that would be get you in front as far as an ideal entry point. The stock broke above the 5 and 13 hour simple moving averages. You had that MACD positive crossover, and then your RSI turned positive. But currently, I'm going to go back to the daily again. We are getting nice dynamics here, but you are not getting the buy signal on the intraday yet. We're still in negative territory. You're going to want to see that break back above the moving averages. You want the RSI to turn positive and the MACD. So keep this one on your radar. From here, I'm going to share with you another software stock, Cadence Design, CDNS. This is stock was a big winner for us several periods throughout last year, but really has not done a whole lot this year. What I did want to point out to you is the fact that the stock, again, going back to July 20th, at the end of that period when software stocks pulled back, we have this cup with handle base breakout. So essentially what occurs during that period is the stock hits a new high in price, or certainly close to it, and pulls back. What you want to look for is the stock to form the right side of the base, but not get quite up to that prior high. And subsequent to that, it does have a back and fill period of consolidation. So it's a form of a pullback. So what we are looking for from here is a price break above this back and fill period here. We want the stock to break out of that, and that would in fact be a cup with handle base. So this was on my radar, poised to experience that after this period of consolidation, not quite a pullback, but similar in nature. Again, your outside momentum indicators are positive. And then from here, we can see that we did eventually get that breakout here. This is what you're on the lookout for. It did occur on strong earnings, and the stock is now poised to break out of a longer base. Again, your outside momentum indicators are continuing to be positive on that daily chart. So from here, I'm moving on to a different industry group. This is Marine Max, ticker symbol HZO, and another big winner certainly during the pandemic. And then once the vaccine was announced, I believe they are a boat brokerage firm. So going back to the end of July, we can see the stock hit a new high in May and really just fell out of bed. Subsequent to that, just marking time for 5 weeks period, but the stock did find support here at this 200-day moving average. So on the lookout for a reversal of this pullback. And as you can see, what we're going to be looking for is a price break back above that 50-day simple moving average. And your first positive signal are these two volume up days. The RSI turns positive, and then your MACD, while it's negative, it did have this early crossover signal back here. So let's go ahead and take a look at a current chart of HZO. Not the best looking chart, but we did eventually get that pullback downtrend reversal with this price break back above the simple moving average. And then subsequent to that, now your shorter term moving averages are trending upwards, so the stock is poised to trade higher. We did get that MACD turning positive moving average convergence, divergence, as well as the RSI. So it certainly looks to be on its way higher from here. Consumer discretionary, I failed to put a heading there, but it was another area that experienced a pretty sharp pullback here in July. A lot of that had to do with inflation fears, prices rising dramatically, and investors concerned that consumers would pull their wallets back, so to speak. So a lot of consumer discretionary stocks did get hit, but we can see the pullback again presenting itself as an ideal opportunity. So from here, we can take a look at an example of a retailer. This is Dick's Sporting Goods, DKS, and this stock has been a big winner for MEM Edge report subscribers. We did get into the stock prior to this big gap up here on earnings. The company is expanding very, very quickly. They have new concept stores within sporting goods. So what I wanted to focus on at this point, and we did get two pullback buying opportunities, but this more recent one with DKS in line with the sector, it undercut that 50-day moving average, but buyers did come in and support the stock so that it closed above that 50-day simple moving average, and that's very bullish action. And then from there, we can see that it did continue to trade higher. So during this pullback period, it was a bit tenuous with your RSI turning negative, but your MACD did stay positive, and then upon that pullback reversal back up above those moving averages would be an ideal buy point. It's in line with this MACD crossover, which is telling you that this period of consolidation, this pullback, has now turned positive. So we're in good standing here with DKS, Dick's Sporting Goods. So moving on to a very large stock, I'm sure everyone is familiar with Facebook, FB. So I wanted to point out how historical precedent can really be quite helpful if you are looking at a stock, perhaps you own Facebook. There tends to be patterns, if you will. Of course, that's what technical analysis is all about, is identifying those patterns. And we can see going back to the end of April, Facebook gaps up, very strong quarterly earnings, and pulls back subsequently to its 50-day simple moving average. And then going into their earnings, we can see in late June, Facebook hits another new high, pulls back to that 50-day, the red line, 50-day simple moving average. This is taking us to July 20th. So let's see if history repeats itself. Here's a current chart, and here we are. This is that July 20th, and yet again, Facebook hits a new high and pulls back. So we're still going to see, it seems to be holding fairly well around this 21-day simple moving average. But again, historical precedent tells us that on Facebook, generally speaking, a pullback to that 50 can be an ideal buy point. Of course, you're going to want to marry that with your outside momentum indicators, all staying positive throughout this bounciness, if you will. So here's another example. This is 3D Systems. DDD is the ticker symbol, big winner out of the new year, in the beginning of the year. But we did get a very extensive pullback, and 3D did give up a good part of this big gain here. But let's take a look at the downtrend reversal. So 3D pulls right back to its 200-day simple moving average. And when you are looking for a reversal of that pullback, again, I want to see that the stock has historical precedent of being able to trade faster than the markets. We did see that. So here is the buy point on the daily price chart. 3D breaks back above that 50-day simple moving average, and you can see the the RSI. We got a little bit of a head fake, but beyond that, trending and trading upward. And then down here, the MACD moved into positive territory up above that 0. So I'm pointing the stock out because for me, it is on my radar. I'm on the lookout for another pullback or downtrend reversal. It's finding support at that 200. I'm going to look for that break back up, and then your outside momentum indicators to turn positive to indicate potential another leg up for the stock. So here's an intraday intraday view so that you can really fine tune your entry and exit points. So this is a 2-hour. I use that so that I can get all of the display in here. So here is, let's go back briefly here. This is that downtrend reversal. And you can see back here, if you marry it with the intraday, what you are going to be on the lookout for. Again, a price break back above the moving averages, your outside momentum indicators turning positive, and then also intraday can be used as well as daily for your exit point, a break below those simple moving averages. We can see the significant downtrend. So yeah, really helpful when you can marry different time frames of charts when you're, particularly if you're a more active trader, you can drill down to that intraday. So here's an example of another winner from my MEM Edge report, one of many. This is Marvell Technology, a semiconductor stock. We did put the stock on the suggested holdings list upon its reversal of this downtrend, and that would be indicated by a break above these simple moving averages, your RSI again positive, as well as your MACD, and the stock has advanced quite significantly. It's been also, you want to take a look at that semiconductor group, which is a lot of the work that I do, is in addition to identifying stocks, is also identifying where that strength is. It's within tech, which sub-industry groupings, why the strength is there, and then from there picking those best candidates that then go on to really outperform the markets. So quick here we can take a look at back at another software stock. This has been another big winner for MEM Edge subscribers, software stock Adobe. And that pullback reversal is what got us into this stock back in here. Also, the volume characteristics as the stock reversed this downtrend. And again, we're marrying those outside momentum indicators, but that volume gave us that confidence that there was further upside ahead for the stock. We're staying with it through this period of consolidation that we're seeing elsewhere, but it's been certainly a big winner, a big grower as far as strong earnings as well. So here we are looking at a stock that had a big gap up today. I mentioned that we are in the throes of earnings season. This is Polo, Ralph Lauren, RL is the ticker symbol. And it did have again, another name that hit a new high here in May and had a very extensive pullback, but for the most part, found support. We had that one outlier day, but it did find support overall at this 200-day simple moving average. And I'm pointing it out because the action, certainly over the last 2 days, highlights and points to a stock that very easily could continue higher as it has reversed this downtrend. You're going to want to pay close attention to the volume characteristics as it reverses that downtrend. We can see that the RSI and the MACD have both turned positive on RL, but most importantly too is the fact that very, very strong, or isn't super strong, better than expected earnings for the stock really has propelled it higher, and we can see it has that ability to trade higher and faster than the markets once it gets going. And it is in an industry group. There was another peer stock to Ralph Lauren that had similar price action today as well on strong earnings. So a lot of bullish characteristics taking place here. So today I know that we were wanting to share with you my top stock idea. This is certainly one I really had a very lengthy list, but I wanted to highlight Amcor Tech. It's a software stock. It's a little bit smaller, but in line with the work that I do as far as identifying big winning stocks. This was a big winner for me going back here. It ended up, I believe I was up 88% before selling the stock. So again, that predisposition, that ability to really outshine, outperform the broader markets. So what we are seeing here is the company reported their earnings last week. So upon the release of that report, we did get this nice base breakout. This is a saucer base where the stock hits a new high, pulls back, and then upon that move above the prior high is what's called a base breakout. And we're getting really nice volume characteristics as the stock does appear poised to trade higher. So when I get into these faster moving stocks, I do add an additional moving average. In this case, this is a 5-day simple moving average. And quite simply, the reason for that is when these stocks really get going, they will use that shorter term simple moving average as support when it's in this very strong uptrending period. And very similar, I'm not sure if you can see that, but this blue line is the 5. So it really doesn't even pull all the way back to that 10-day once the stock gets going. So currently at this juncture, the stock is finding support at this upward trending 5-day simple moving average. And then we can also see that your outside momentum indicators are trending upward up above that 50 level. And likewise with this moving average convergence divergence, this MACD has this nice black line up through the red that's indicating that the momentum has shifted. We're now trending upward. So that is one. And then I actually do have time. So I'm adding an additional one for your radar. This is Micron technology. It's in the semiconductor industry in that space. So the way you can screen, this is one of many ways. I will share particular screening characteristics further as we move on, but quite simply, a screen that you can run on a regular basis is looking for stocks that have broken back above their 50-day on big volume. So MU, again, it does have that ability to be a big outperformer. Once it begins to shine, come under accumulation, you're going to look for those big volume characteristics on its way up. So at this point in time, we did have a bit of a head fake, if you will, here at the end of June. But this break that we are seeing today, this is a current chart back up above that 50-day, we did get very nice volume characteristics, but it was on news. There were two different news items. One was the fact that the stock is going to begin issuing dividend. Cash dividend, that was one positive news. The other is relating to a product release, which can often be a catalyst because then growth prospects are improved. Too early for me, but again, keep it on your radar because we did see a positive RSI take place. We did get that nice MACD crossover. You're going to want to see it get up above that 0, and I'm going to want to see a couple more days simply because this downtrend, it's quite a bit to reverse. So a break above this prior high would have me more interested. So let's take a look at how you can screen for these candidates. You want to screen for stocks, as I said, that have been big winners. You can use year to date up 20% or more. The S&P's up about 17. So you want that outperformance. The current price is going to be off of lower than that recent high in price. And you can play with this 5%, 10%, but generally that's going to indicate the stock has pulled back. You want that RSI on the daily chart to be positive and the price above that 50-day simple moving average, and then ideally above the 10-day moving average if the stock has not pulled back tremendously. So those are the ways that you can screen. Let's take a look at my offer for today. It is to take a 4-week trial of my biweekly MEM Edge report, and you can do so for only $7. There is a link here. I believe there's one in the chat as well. You can Also, in addition, I talked about being in front of sector rotation, group rotation, just a lot of insight. I have a lot of super happy subscribers and longtime subscribers as well to this report. Also, just highlighting some of the advantages of the report. You do get entry and exit recommendations for each of the stocks on our list. There are, at this point, I believe, about 14 stocks. It's a very, very select, highly selective, high-performing list of stocks. And then also information throughout the week. There is a bi-weekly report, but if there is activity that takes place intra-week, you will be informed of that. And then also educational. I hear this from a lot of subscribers. In addition to being given these stock ideas, it really explains why that stock is poised to trade higher, why that group is in favor. So very educational as well. Here are some recent trade examples. Just over the past couple of weeks, we can go back even further. Actually, that is a closed trade, but these are many big winning stocks that we've been able to identify. You can use this link here. Actually, that should have a T on it, or I believe in the chat there is a link to do so as well.